Hello, Maverick traders. Welcome out to your market roundup for December 16th. Corey here with you. We're going to take a look in meaningful news. We're going to look at sector rotations, where money's moving, and then always highlight our very best bullish, bearish ideas.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, so as we look at the markets today, it's kind of interesting what's transpiring. The S&P is really flat, but the leaders are leading, the laggards are lagging. So the NASDAQ had a nice day, up 1.24%. The Russell, about 0.5% higher. Oil down 1%. And if you look at 2024's performance, really, the NASDAQ has had a robust year. Oil and energy has had a poor year. And so this is a little microcosm of what's been happening. And NASDAQ strong today, oil weak, and that continues. Markets are really consolidating, but you're seeing leadership groups, the strongest names, and it's only a small handful of the biggest names, but they continue to perform. And then the laggards, energy sector, so many things are actually going down. There's more stocks falling most days here recently than going up. It's just that the biggest names, the Teslas of the world, are booming. So advanced decline line today was half and half, but notice the 50-period moving averages come all the way down to 50-50. Just a week ago, there were about 66% of stocks above their 50. Now there's only 50%. So is the market declining over the past week? In other words, are more stocks falling than rising? Yes. But the S&P is actually just flat. We touched on the idea of kind of fading the bigger reactions, fading the little exhaustions down or up, and you get a little bit of a push down, and then you get a little push up. And you can see the S&P is just going nowhere at the moment. Now, I would not have expected it to be literally this flat, but not shocking. I think it's propped up by the big large cap NASDAQ names, and here you can see it in the NASDAQ chart. That is doing well. And so if you're trading the Teslas of the world, well, you'd pretty much have to bet on them going higher into year end. Part of the January effect, what the January effect is it's a taxation question. Who wants to sell their best performers late in a calendar year? Well, the answer is basically no one. Because why would you want to pay taxes on that gain a year early? Why not delay that if you can? So if you have a big capital gain in Tesla or Nvidia or Amazon or Google or whoever it is, do you want to sell your shares? Maybe, but you don't want to do that in 2024 and have to immediately pay the taxes. What you'd like to do is have the calendar flip over to January, sell them in early January. Now, I'm not saying that most people want to sell all of their shares, but you can imagine that if you owned a lot of Tesla, it's grown in your portfolio, and now it's a bigger percentage of your entire portfolio. So does this institution and that institution want to actually sell some of their Tesla shares? Probably so, but they'll wait until January. So the stronger stay up because there's just not that selling pressure. And guess what? The things that are down a lot, like energy stocks, like oil and commodities in general, if we said the materials and some of these sectors and industries, steel stocks, whatever it is, if they've been underperforming, gold miners and such, well, it makes sense that people would want to sell them right now. Why? Because you get to use that loss for tax purposes. So the laggards get hammered at the end of the year. The leaders stay up. Once January hits, that oftentimes will flip-flop. They'll come back, and 30 days later, they can buy back the things they sold without washing out their sell, right? The wash sell rule. You have to wait 30 days if you sell something at a loss before you can buy it back. So they wait 30 days, and then maybe sell it in December, buy it back in January. The things that they wanted to sell, they hold on to them in December, they stay up, but then they go down. So it's kind of once January hits, a lot of the leaders lag and a lot of the laggards lead, but that we're not in January yet. So not surprising that through the end of the year, the stronger things are holding up strong and the weaker things are going down. That makes perfect sense from a seasonality standpoint. Tesla up again, Amazon, Google, these are the things that are running higher, and they're running higher still. United Health continues to get hammered, energy stocks getting hammered. Telecoms, anything that's been a laggard is probably struggling right now, would be a general guess. Now, let's take a look at some ideas here. We've got some bulls, we've got some bears, and I think, as we've been talking about, just kind of playing that momentum really makes the most sense. So Google, it has broken out to the upside. We're a little bit late here from the breakout point, but I mean, there's probably still more upside, right? I would anticipate up over down. If we were looking at something like Walmart, it's consolidated. So if you wanted something that could just start to break out, that's had a tremendous year, Walmart's not there yet. You might wait on this one to break out. Google's more of just ride the momentum. You want to look at bears, look at things that are continuing to trend lower. DHI, DR Horton, broken that old prior support level, and the momentum continues to the downside. Uber has broken support, and the momentum continues. I think we had Uber on this bearish list back at this breakout point, but it continues to be a candidate. So you could watch for a little pullback of a day or two and then short. You could play it as a consolidation and then further break, but it would be one that I would have on my list of potential candidates, and really a good representation of what we'd be looking for. So through the end of December, expect the leaders to stay pretty strong, the laggards to stay pretty weak. Once the calendar hits January, though, that often reverses. So do not be shocked and surprised. I want to emphasize this point. Do not be shocked if a lot of trends start to turn right around the calendar year, flipping over. And I should point out that a lot of times that starts to happen in December. Some people try to jump the gun a little bit. So maybe some of those laggards start to bounce a little bit early, a day or two early, and that sort of idea, maybe late December. But really, as we get close to Jan 1, a lot of trends can reverse pretty sharply. We've got the Fed meeting on Wednesday. They're expected to cut rates by 25 basis points, and then still quite a few companies reporting earnings. We've got Carnival Cruise, FedEx, Lennar, that's another home builder, Micron, Nike. Nike reports on Thursday, and there's another example of a lagging stock. So, hope you've enjoyed today's market roundup. Have a great week, everyone. We'll see you next time.